when this happens, when suddenly there is, the West loses that pricing control, the whole pricing scheme that we've been held under, it's a fractional reserve, digital derivative-based pricing scheme where the trading of the futures contracts determines the actual physical price. That eventually unravels when there is no, like I said at the beginning, the bullion banks have to be able to flow physical metal into that derivative price. Otherwise, it's pointless. I mean, you might as well be trading baseball cards.
This is Little by Little with Andy Schechtman.
All right, everybody, welcome back to another episode of Little by Little. I am very, very happy to have Craig Hemke back with me, the author, proprietor, and owner of the TF Metals Report on Substack. Craig, I've always been a big admirer of you. Not only, as I was saying, are you a good guy, as I was saying to you offline, but you're smart as hell. And with the passing of Ted Butler, God rest his soul, I really do believe you are the next in line to carry the torch on analyzing what happens in the Comex, which is not an easy thing, and you're very adept at breaking things down. I suggest people follow your work, subscribe to your Substack. It costs next to nothing, and I find it to be very illuminating, and your podcasts and your writing, top notch. I appreciate you coming on, brother. And with that in mind, this top-notch mentality that you have, tell me a little bit about your background. What initially drew you to precious metals, and maybe how was that perspective in all of your conversations with Eric Sprott and all of the research you've done along the way? Have your perspectives on the industry and markets evolved over time?
Oh, goodness gracious. A little. Andy, I tell you, first of all, thank you for the kind words and the friendship over the years. And it's a pleasure to have you as an advertiser on my site at tfmetalsreport.com. And I think the world of your company, Miles Franklin, I never hear anything but great reviews from anybody that goes from my site or from my Twitter feed to Miles Franklin. So thank you for your support. There are others too that carry the flag. I suppose Ed Steer, who I've never met, tries to kind of pick up where Ted left off too. There's all the commitment of traders data. Ted, God rest his soul, tried so hard to see through it all. It's like anything else in the precious metals market. They make it as deliberately opaque, about as clear as mud as they possibly can. And that's all part of that awakening, if you will. I was a stockbroker right out of college, but I was actually trading commodities. I had a brother-in-law that was a commodity broker. When I was in college, got the great soybean run of 1988. That's how old I am. And was hooked. I spent a lot of time, though, the rest of my career in financial services. And then around the time of the financial crisis in 2008 and 9, I, like a lot of other folks, started to kind of went, ooh, maybe this isn't exactly all that they've always told us it was. In the markets, Fed policy, the way I call it the media, political, financial complex, and now they all have their own beaks dipped in the trough and, kind of take care of each other. And they start learning about some of these things that aren't exactly what I thought they were. That then led me to gold and silver. And brothers, all you got to do is watch gold and silver for about a day or two, and you go, wait a second, there's something really seriously effed up about how these things trade. And then that led me to the last 15 years of torture. My own side.
Who would ever do that to themselves?
Right, exactly. What you can't tell, I'm actually only 25. Look at what has happened to me.
Well, you still look good for a 25-year-old. You got your wisdom about it. Well, and I respect that, man. And I've been doing this for 35 years as well, and I understand how it can wear on you, and the counterintuitive nature of it can certainly wear on a person. I get all of that. And, it's funny, you dated yourself more by calling yourself a stockbroker know, back when I started Miles Franklin in 1989, there was no internet and there were virtually no financial advisors. They were stockbrokers. And then, of course, with the advent of Scottrade and whatnot, everyone became a financial advisor, which is an interesting dichotomy in and of itself in terms of trying to remain impartial and open-minded, I guess we could say, about things like precious metals. So, you know, you've highlighted issues with the Comex for a long time, Craig, and you're open about talking about manipulation and the lack of transparency, as you say, as transparent as mud. And the disconnect between paper contracts and physical supply, it's a complex thing for most people to understand. For me, I see the growing delivery demands across the LDMA and Comex as potentially, along with the massive structural deficits we're seeing between mine supply and demand, potentially being that moment now or that catalyst for setting the markets free. Do you think the market will ever truly be set free? Because, you know, the people that I talk to every day say, I mean, can they just do this forever?
Yeah, right. To some extent they can. So they've proven over the 15 years I've been doing this that they can. They are ultimately, there's a job called the bullion banks, the bullion bankers that operate in London and New York. There's a management of price. There's the physical price where metal actually flows. And there's this paper price that actually wags that spot tail, if you will. That paper price, though, can only move so far because you actually have to be able to deliver physical metal at that price. So, which is kind of supportive of price now. I know we've been getting the crud kicked out of us for the last week. But when people say, well, gold's going back under 2,000, well, actually, I guess if all central bank demand and everything else dries up, okay, then maybe they can bring it down that far. But the problem for these bankers is they've got to flow physical metal into this price that's derived by the trading of futures contracts, which puts them in a bind from time to time. We saw this just last week, Andy. It's crazy. We're recording this here on the 19th. You just go back to the 11th or 12th last week. Some very unusual occurrences were going on, primarily rooted on the Comex in New York, where the current, or what had been what we call the front month, the December contracts, were off the board and allegedly making what we can delivery. And the price of those front month contracts started to blow out higher versus the spot price. Well, there's no way that should happen for a number of reasons. But it did for both gold and silver. And it was evidence of some kind of supply issue. Well, lo and behold, a week later, that supply issue seems to be fixed as silver's down 12% in 5 days. What can ultimately break that stranglehold that these banks have really, honestly is just physical supply and demand. Get to the point where this system, this trading system, this derivative-based pricing scheme can no longer flow metal at any price because there's just not enough metal to be found. Obviously, that's not the case yet. But that's why it's so important. We've been stressing this for 15 years. If you want to find free and fair price, something that's actually where price is derived through the trading of physical or something close to it rather than these phony baloney futures contracts, then all we can do is continue to take metal off of the system, offload it, buy it from Miles Franklin, take delivery, or you guys can store it, get it out of the bankers' hands, and squeeze them from a physical standpoint. We're not there yet. 4 years of supply deficits in silver, 200 million ounces a year, hasn't done it yet. But there is hope that eventually, if we just keep up this pressure, global demand continues, that'll be the key to finally breaking the stranglehold. I'm sorry, that's a big, long, rambling answer.
That's a great answer. And I'll just add to one, I'll just ask kind of one little point or add to it by asking you, it's one thing for the retail buyers to pull metal off and to buy from us and other great companies out there and take physical possession. But do you think that countries like the BRICS nations, like China, like India, Saudi Arabia, Russia, all of these countries who are de-dollarizing. Do you think they understand that?
Oh, I think there's no doubt that's been supportive of price, particularly this year. Do they understand the system, what they can do, you mean, about in
Yes,
terms?
in other words, are they doing it in a very methodical way because they understand what is happening? For example, the BRICS Grain Exchange, the gentleman who is running it or helping build bring it to reality says, we produce more grain than the West does, we consume more, but we don't control the price. It's controlled on Comex. And with the development of the BRICS Grain Exchange, that will change. Now, you could say the same thing about their aspirations of the BRICS Metals Exchange. My point is, are they playing the long game against us? Are they using our leverage, in your mind, against us to stand for delivery? Because when you started doing this, no one stood for delivery. And now there's a lot of delivery. Could it be that they understand this and they're playing the long game?
Oh, certainly. Yeah, no doubt about it. They have to, seriously. And I always think you and I have figured this out, Andy. You were sure.
I know that, but I want people to hear it from you because
right.
you are an expert.
No, but I always think that then the People's Bank of China has figured out that, that Putin and his cronies have figured it out. At this point, though, they have to sit back and go, wow, they're willing to let me cobble together 2,600 of their American dollars and they'll give me an ounce of gold for that. Okay. We'll take them up on it as long as we can. And so, again, that demand, that shift, all they're doing is on a much larger scale what you and I and most people watching are doing, which is we're taking our dollar reserves, our savings from our hard work, and we're converting some of them into physical metal. Well, that's what these countries are doing at the sovereign level. They're taking their dollar reserves from all their export business and their, economic production, and they're converting them into gold and even now in some cases silver. That demand has played a huge role. I don't think there's any doubt about it. It's particularly in gold this year, because again, we're seeing now the third year in a row of record central bank gold demand, and price has rallied this year. What are we this morning? 2,600 or something like that. We started the year closer to 2,000. So we're still up, a significant percentage, 25% year to date, while interest rates in the U.S. have been rising, while the dollar index has been rising. Typically, that's, an environment where gold prices suffer. Even if you want to compute real interest rates based off of, current conditions and that sort of thing and inflation expectations, gold should have been heading down this year, but instead it's been consistently moving higher, at least until the last 6 weeks or so. So yes, I think the central bank demand is having a major impact. Do they understand? They have to understand what they're doing. I can't imagine. I'll give you one more thing. You talked about the BRICS Grain Exchange. I remember I mentioned this trading grains with my brother-in-law back in the 80s. And the stories back then were that, that all of a sudden you get this bombing run on the Chicago Board of Trade, and all of a sudden wheat futures would collapse over a period of a couple of weeks. And everybody like, what the heck? And then, a couple of weeks after that, here comes some massive Chinese order for American wheat. That's all hearsay from back in the day, but I've heard that. There was a guy, you ever know Jim Comiskey? You remember that name? Commodity broker.
I'm assuming is it related to the Comiskey family in Chicago, Comiskey Park?
I never asked Jim if he was. He was a commodity, just a great Chicago commodity broker and a friend of mine 10 years ago. And he passed away about 10 years ago. But he talked about this too. This was kind of in the lore of grain trading, that the Chinese in particular would use the system against us in a sense by smashing the futures price and then put in a big delivery and save themselves some cash, right? So I don't know. It's hearsay from 35 years ago. But again, if that was the case, then why wouldn't they be doing that now? We just saw this report, I'm sure you did, Goldman Sachs put out, thought China publicly stated they bought 5 metric tons of gold in October, but Goldman Sachs think they bought 55. So that's the case. That bid continues. That obviously is going to continue to prop up price through these banker slams that we're currently dealing with.
100%. And I agree with you. And I appreciate your input on that. Pierre Lassonde, the founder of Franco-Nevada, the former, maybe he still is the president of Newmont Mining, came out and said the gold price will ultimately be decided not in the United States, but in the East. The day the Shanghai Gold Exchange surpasses the Comex in transactions will mark a seismic shift. Gold's pricing power will move decisively from the West to the East. Now, interestingly enough, when you take the cumulative volume of the Shanghai Gold Exchange with the Shanghai Metals Futures Exchange, those two combined, that volume now does outpace the Comex market, making it, in essence, the second most actively traded market in the world in terms of precious metals, right behind the LBMA, but not on its own yet. The gold exchange, when added with the futures exchange, yes, but not quite yet on the gold. What do you think when you hear that? Because that's what we're saying here. In essence, they're playing the game, using the Western suppression, draining quietly and methodically and slowly, not too fast to raise attention, but enough to watch the stockpiles drain. And at some point, Pierre says the West will no longer control the pricing. What do you think when you hear that? You agree?
Oh, for sure. I mean, it's something I've been writing about, again, for over a decade, this kind of steady movement from west to east of physical metal. You know, all the stories we'd hear about taking the 400-ounce bars out of London. And you can actually track this. Remember, I forget his name now, the guy that ran Gold Charts or Us. He retired. He sold it to someone.
Yeah, I still talk with him.
Oh, jeez. Here's a two old farts.
His name is Nick
Laird.
Yes.
Hey, see, we're not ready for the home yet, Andy. Well, at least you're not.
You're only 25, so you got a long time to go.
Nick on his Gold Charts or Us site would track. I mean, you could have charts showing the export of gold from the UK, where they don't mine any, right? So it's just coming out of LBMA reserves, and then the import into Switzerland, and then the export out of Switzerland, and then the import into Hong Kong, into China. And again, this has been going on for over a decade. And what's happening is the standard is shifting. They're taking those 400-ounce bars and recasting them into kilo bars, the 4.9 quality kilo bars. This has been going on, like I said, a long time, and it will continue. It's just a steady drain. And again, people think, well, why? And again, and what is the significance eventually? When this happens, when suddenly there is, the West loses that pricing control, the whole pricing scheme that we've been held under, it's a fractional reserve, digital derivative-based pricing scheme where the trading of the futures contracts determines the actual physical price. That eventually unravels when there is no, like I said at the beginning, the banks, the bullion banks have to be able to flow physical metal into that derivative price. Otherwise, it's pointless. I mean, you might as well be trading baseball cards. And so that's why that physical metal has to be there. We don't know how much is left. We don't know how, Ronan Manley is a guy that has done exhaustive research about how much actual metal there is in the vaults of the Bank of England and at the LBMA. Metal that's not actually owned by the ETFs or owned by the Bank of England or whatever. There's actually unencumbered, clear title stuff. And nobody knows. But this steady drip, this steady extraction is clearly continuing to put pressure on the system.
Absolutely. And just to support what you were saying, let me see if I can find this right here. Let me just put something up here real quick, just to support what you are saying. Right here. Here is the LBMA vault for silver. And so 800 million ounces, they say 500 million belongs to the ETFs, only 300 million left, but you can see the drawdown. And that's kind of what I'm getting at about them using this against us, if you will. And it appears to me that they are. I agree with you. So moving on, as we've mentioned, the central banks like China, like India, like Turkey, like Poland, like Kazakhstan, they've all significantly increased their gold purchases recently. And in October alone, purchases doubled the 12-month average year over year, with the Reserve Bank of India leading both year-to-date and monthly totals. My question to you is, and I'm actually looking forward to hearing your answer, why do we hear so much less about central banks adopting Bitcoin when that's all we hear about here. What are your thoughts about Bitcoin's role compared to gold?
Well, I bought Bitcoin. The only time I've ever bought it was back in the spring and summer of 2016.
Whoa. Hope you
and-
still have it.
Yeah, I do. Well, some of it. When they initiated Bitcoin futures, whatever that year was, about 2018,
I remember
I said,
that.
"Wow, this is, now this is not just a straight supply demand thing anymore. Now we're going to have synthetic Bitcoin and all that kind of stuff." And so I sold a little bit of what I bought back then. Oh well. No, but I still, look, I see it as it's another alternative to the dollar. It is a more speculative investment. I don't know what the future is going to hold, for it. It's impossible to say, but I do know what the future is going to hold for gold because we've been doing this for 5,000 years. I think it's a companion trade. It's something in addition to my gold. It's not a big position that I have. From the fiat making standpoint, I wish I could go back 10 years ago and buy some when it was $60 a Bitcoin or something. But in terms of whether it'll work as this sovereign reserve, like Trump is talking about a U.S. Bitcoin reserve or something, there's this folly that somehow the U.S. is going to buy enough Bitcoin that the Bitcoin is going to go up in price, and then the Bitcoin can be sold to cover the national debt. I mean, come on. This doesn't work that way. There might be enough demand at the sovereign level to continue to promote the price. Again, though, for my purposes, I don't want to just speculate on that. I mean, it's a fun little trade vehicle. I'm going to rely more upon history and knowing how this has played out in the past. And like I said, 5,000 years of monetary history where the currency gets debased to the point where it becomes essentially worthless. You need a new structure. You need a new currency to get trade started again, to have some confidence in using it, and that the thing will retain its value. It's partially backed or fully redeemable into gold. It's just how it's always been. It's how this current system started 80 years ago. You could convert 35 US dollars into an ounce of gold. And that gave everybody the confidence to use the dollar in rebuilding after World War II. The US had 25,000 tons of gold back then. And that's why we have this exorbitant privilege of the reserve currency in the first place. But that's not going to go on forever. Whoever has the gold next, I think it's simplistic to say we'll make the rules. But that is eventually where this heads. So, like I said, do I own Bitcoin? Yes. Do I think it is a speculative asset? Yes. Is it a complement to my gold? Yeah. But it certainly is not. I don't see it in any circumstance going forward where it is a replacement.
I see you've been tweeting a lot about Fartcoin, and is that also in your asset base?
Isn't that something? I don't want to get. I get distracted by it because it's so obvious to make fun of it, right? And then now it's the market cap, if you will. There's only a billion fart coins out there, and they're trading at $1. So you say the market cap, if you will, is $1 billion, and that's bigger than all these public companies and all that kind of stuff. It's just it might as well be a penny stock. I mean, I don't see.
You imagine the guys that developed it saying, "Can you believe this shit?"
Yeah, right.
I mean, it's $1 billion. It's more than all these. It's crazy. I digress, brother.
Right? No, but if anything, Andy, it is a sign of the speculative excess of the markets. That something like that. Again, it's a perfect example of the greater fool theory. That we learned 30 or 40 years ago in college. You're buying something in the hope that a greater fool will buy it from you at a higher price, and you'll be able to sell it to them. And that's really all those things are. It's fun to make fun of, but I don't want to make it into any bigger deal than it is. It might as well just be a penny stock that was trading at 20 cents that went to $1, like what happened with Wall Street bets and, that kind of stuff. Bigger picture, it's symptomatic of a number of things as it relates to this conversation. it just shows you how, I mean, we're not even on the radar, Andy, you and I, whether it's trading precious metals or the mining shares, we're not even, you can't even say we're an afterthought. When there's digital tokens, if you look down the list, starting at Bitcoin and go to Ethereum and Tether, and you go down the list, you get down to like the 13th and 14th biggest market cap. I don't like using that term, but if you do, things I've never heard of, I have no idea, they have any viability at all, but they have a market cap of like $15 billion. Well, the entire GDX ETF has a market cap of about $13 billion.
Crazy. If you could buy every mining share on the planet.
Yeah. I mean, there was a day last week, and this is again, Fartcoin's a symptom of all this. The big eight, there used to be the Mag 7, now it's the big eight. They include Broadcom, I think. All right, so there was a day last week, Monday, maybe last week, where just those 8 stocks alone added over $400 billion of market cap. $400 billion in a day. And again, the GDX has a 13 to maybe $14 billion market cap. We're not even on the radar at this point. And that will change. Everything cycles, but man, for now, between Bitcoin and Fartcoin and everything else, it's all part of the challenge.
Sorry, I got a new puppy in my house, and creating quite a stir with her brothers and sisters, and so she just came into the room.
Yeah,
and
nice. She looks like
got a bone next to her, and she's like, "Get the hell out of here!"
She looks like a good girl.
Let me show you real quick, because she's really. I'm sure we'll let to see. This is the new one. I mean,
oh my gosh,
she really weighs like about 2 gold coins. So, before I got on with you this morning or this afternoon, I interviewed Judy Shelton. What an amazing woman she is, and how brilliant she is. And she advocates for reconnecting the dollar to gold through the federal treasury bonds with a gold redeemability clause. And with gold increasingly being adopted by the central banks, Craig, and playing a larger role in global finance, where the BIS reclassified it as the world's only other tier 1 asset, where the central banks have been buying it hand over fist. Much of the gold across the globe has been repatriated, both from the Bank of England and the New York Fed. Bank of India just took 100 metric tons home. There's only 22% of the gold that used to be held at the Fed. Now, used to be 100% or whatever the number was, it's down to 22%. So much of the gold has been flowing back to the countries that own it. Do you think gold could ever regain a formal place in the global monetary policy? And before you answer that, even Kristalina Georgieva, the head of the IMF, said that a central bank digital currency not pegged to something is fiat. And earlier in the year, at the beginning of 23, there was a report they issued saying gold as an international reserve currency, a barbarous relic no more, ? So you have the IMF, you have the BIS, you have the central banks, you have repatriation, you have accumulation, the draining of the exchanges. There is something going on. Could it ever regain some form of a formal peg or place in the monetary system? Then I only got one more question for you after that, and I really do appreciate you coming on, brother.
Well, and first of all, it's my pleasure. It will happen. What frustrates me is one, lack of patience. Right? Everybody wants something right now. It didn't happen this week, then or if I don't make 20% in a day, everybody's got it. Nobody has any patience. So that's always very frustrating. But what will happen is not this binary flip. People think, well, there's going to be a BRICS currency, there's going to be an alternative to the dollar and all this stuff. And that there's somehow this binary choice where one day it's a dollar and then all of a sudden the dollar just goes away. And then we have this. It's not going to work that way. I mentioned earlier, you back your currency, whatever the new one is, with gold or with a basket of gold with other things, anything to give it some heft, right? Some gravitas, like they used to say about George Bush. Remember that back in the day? You have to, if you're going to, let's say sometime in the next however many years, an alternative is put out there to rival the dollar, or at least to allow these countries that are see their foreign policy as potentially adversarial to the U.S. and the West. And so they don't want to get cut off the U.S. system like what we did to Russia. And so, well, we better come up with our own system here. Well, to encourage use of that system, you can't just say, so we're going to use the yuan. And, well, no, let's sit back and go, I don't know about that. But if you come up with something that's like a basket of everybody else's currency and half gold, or I'm just positing whatever, but you anchor it with something so that you have confidence that the thing will retain some value, so that if you trade from one country to another and you use this as the conduit, you end up with a reserve of these things. You don't want them just, getting cut in half in their value in 6 months, like an emerging market currency. So you anchor it with gold, and that gives it some, like I said, some heft to allow, okay, you know what, we will use that a little bit. And then that becomes kind of a death by, well, we're already in a death by 1,000 cuts. That just increases the pace of cuts into the US dollar's credibility. And what that ultimately does is just simply supply and demand, because we're in this period where the supply of dollars is growing almost exponentially at this point. Now, I'm not talking about M2 and all that kind of stuff. I'm just talking about the U.S. debt and the amount of dollars, because every dollar is debt, and the debt is increasing so quickly now, and the amount of dollars needed to service that debt is going up. They're just going up like this together. So we have the supply of dollars that's increasing, and if you can begin to cut into the demand side of that by these alternative currencies, then again, that's Econ 101. Increasing supply with falling demand makes a lower value, a lower price. And that's, again, ultimately, that's where all this is headed, Andy. It's, again, people get so frustrated. They want it. I want this to happen now. There's a BRICS meeting back in October. Oh, that there's not ever going to be a big, I'm going to reach over and turn off the light. It doesn't work that way, but it's going to be this gradual, continual move away from the dollar share. Again, that's less demand for dollars. At the same time, supply is increasing. I know you said one more question, but I thought, what one thing do I want to make sure people know from listening to this? So I'm going to tuck this in here now, Andy, if that's okay, as my monologue continues. The U.S. government, the Treasury Department, puts out what they very creatively call the monthly Treasury statement every month. They make the big bucks for this stuff, Andy. Marketing geniuses. Anyway, it's the 8th or the 9th day, business day of the month. It comes out at 2:00 Eastern. And it's a summary of all of the spending and all of the tax receipts and income, if you will, that comes in to the government over the previous calendar month. Okay, so again, we have this much coming in, we have this much going out. That's your deficit on a monthly basis. The deficit for the most recent month that we got was November. The deficit for November alone, Andy, $367 billion for just the month of November. The new fiscal year, the U.S. government runs a fiscal year October 1 to September 30th. So new fiscal year just started on October the 1st. We ran a $200 billion deficit. In October, we're up to $624 billion of deficit spending in just the first 2 months, the first 61 days of the new fiscal year. That is not sustainable. It's certainly not sustainable with the Fed talking about hiking rates and higher for longer and all this other crapola that we got fed yesterday and the metals got crushed. That alone right there is why the metals are going to continue to go higher. That requires constant devaluation of the currency, paying off yesterday's debt with a cheaper currency tomorrow is how the Keynesian economists have always done it, and they're going to do it again. And it is that endless exponential growth now of the debt that will always keep a bid under the precious metal and makes gold more valuable every day.
Yeah, you talk about the economy Trump is inheriting. To your point, that's the highest deficit on record for the 2 months of the year.
Yeah,
for 2 months of the fiscal year. Yeah. And that includes the spending insanity during the COVID crisis. Yeah. And so, officially the worst start of a year for the U.S. Treasury on record. And you're right, it took till 2009 for us to ever do 584 billion in a year. That's what it was just a few days ago. So it's gone from 584 to over 600 in just a few days. To your point, it's accelerating exponentially. And people don't understand a trillion seconds ago was 31,688 years ago. These numbers are so big, it's ridiculous and getting bigger. Okay.
Yeah.
So last question, and you've touched on this a little bit, but let's just bring it home talking a little bit about silver. And then I know you're in Palm Springs. I'll let you get out to the golf course. I plan on getting out to it here in Florida here later on in about another hour as well. So I hope you
Are you kidding? My wife's got a list of stuff for me to do that's about that long.
Sneak out the back door, brother. She'll never know where you went.
Yeah, good point. Good point. All right, anyway, I didn't mean
Good luck, right? All right, last question. Well, silver is seen as gold's counterpart by most people, but it doesn't always get the same level of attention.
Yeah.
It should, because to me, it's maddening and maybe the most undervalued asset on the planet. Let's just bring it home by saying, what do you see for the future of silver?
It is. I can't even begin to express. I know you feel this way. Probably everybody watching this feels this way. It's extraordinarily frustrating to have held silver as long. Now, fortunately, I've just continued to buy it over the course of the 15 years that I've been running the site since I first bought my first ounce. So my cost basis is like under 20 because, from 13 through 2018, the price was under 20. So I got that going for me. But it's extraordinarily frustrating. Like I said, we just saw a week ago, it seemed like, wow, there's some real physical problems for the banks. These spreads between spot and futures contracts as wide as $1. And then what happens? You get this smash and we're down $4 in 5 days, 12%. Silver and sugar are the only two commodities that have not yet made an all-time high over the past couple of years. I mean, everything else has. So
This goes back to 1980 too, with sugar
going
as
back
well.
versus their previous all-time highs. Yeah, everything else on the full board has made new all-time highs except silver and sugar. So there's all these things that just drive you bananas. The structure of the market, this fractional reserve system, is what allows the price to stay down. These bullion banks have extraordinarily large. It's the most shorted commodity on the board. Again, going back to Nick Laird's charts at Gold Charts or Us. The amount of mine supply that is short by these banks that make the market, it dwarfs every other commodity. You can go through those commitment of traders reports that I was talking about earlier. All the other there you go. All the other, should somebody want to go through they're all on the CFTC site. You go through equity futures and bond futures and Forex and grains and softs and cattle and all that, whatever. And you find no discernible pattern of commercials versus speculators, and one side always long and one side always short. It's just all over the place until you get to gold and silver. And you have these massive short positions by the commercials and the swap dealing banks. And then it's always up against the speculators. It always is. The banks are always short and the speculators are always long. You won't find that anyplace else. And all of this is why, again, we could go on and on about the CFTC and everything that I've learned over the last 15 years in dealing with them and the people that I know and their dealings with them. At the end of the day, it's like the debt. It's a pricing scheme that is unsustainable. Okay. The amount of silver being used now, this is going to be the fourth year in a row of at least a 200 million ounce supply deficit. Now, how many ounces are already above ground? If you count grandma's candlesticks, and platters and tea set, I don't know, 2 billion ounces, 3 billion ounces, if, you think of all that stuff. So maybe we got a ways to go. But however, with the electric trade, the EVs and electrification and green and all this kind of stuff, the demand for silver and copper as well in the years to come is far going to exceed supply. And eventually the system, like the debt-based monetary system, just kind of collapses on itself. And it's almost the analogy I like to use, and again, here I have too much coffee, and it's still early in the morning where I am and afternoon where you are, is like, and this is timely because everybody's watching It's a Wonderful Life this time of year, and the system for pricing silver and gold, for that matter, is a fractional reserve system, not unlike the Bailey Brothers building and loan. And, your money's at Ed's house. And, that scene where George is supposed to be going on his honeymoon, but that Uncle Billy gave out all the money and now everybody wants their money. It's like you can't go to your local bank and take out $2 million. They don't have it in the safe. It's, they have reserve requirements. It's a fractional reserve system. The Comex is a fractional reserve system. And so even as the supply draws down, they keep the system running, but the leverage, the tightening of that leverage, it's just getting tighter and tighter against them. Okay. And then the leverage is going higher and higher. And so eventually it's going to run out. And that's what makes silver such an intriguing investment, even just from a capital appreciation standpoint, because we don't know how many ounces are free and clear of title. I know I can call up Miles Franklin today and you guys will send me some silver, right? But when it gets to the point where China is demanding 500 million ounces in a year, can they get it? You showed that chart of the London vaults only have 300-400 million ounces in them. Well, okay, what happens when it's gone? What's the price? I don't know. So it's been extraordinarily frustrating to hold it. But even here at $29 or $30 or whatever, I think the capital appreciation long-term is significant. If I might add one last thing, Andy, too. This also goes for gold, though. Even in this system, gold has appreciated from $35 an ounce 50 odd years ago to $2,500 an ounce, even within this system. A London bar, 400 ounce London bar, in 1971, you could buy one of those for $14,000 US. It now takes about 1.1 million US dollars. The bar hasn't changed. Bar's the same bar. Okay. So that's how the gold and then eventually the silver too protects your purchasing power. And that's why everybody has to have some. And, if the banks are going to beat back the price and give you a gift that China's happy to take, that Russia's happy to take, that India's happy to take, you should be happy to take it as well. Don't be sore, buy more. Call him Miles Frank.
No, I agree. My dad just told me the other night he graduated college in 63 or 4, and his first job supporting him and my mother was $6,500 a year, and he lived comfortably on it.
Right.
So what happened? Did the cost of living go way up, or did the dollar go way down? And the third thing is true with gold. Craig, you're a breath of fresh air, man. Not only are you a good guy, you have a wonderful outlook on things. Keep doing what you're doing, because the industry needs people like you, even if it be just to hold hands and to keep encouraging us with fact and experience that we're on the right path, that these things don't go on forever. No one understands the London Gold Pool the way that you do. I've listened to you explain it, and all manipulations end badly. And I think that's the moral of the story here. I wish you, my brother, and your family and everyone out there not only the best in the holidays, but a very happy and healthy new year. 2025, I hope it's the best ever for you. I do hope you and I get together and tee it up and play some golf together. But you're always someone that I will follow and respect. I thank you for coming on today. I wish you nothing but the best, and look forward to picking up where we left off.
Andy, my pleasure. Again, my best to you, your family, everybody at Miles Franklin. I hope you have a great Merry Christmas holiday season. Get some rest.
Yeah, what's that?
They're going to ring the bell on January the 2nd or 3rd, and it's going to be like, oh, geez.
Not another year. I know, man.
Here we go again.
Today is the last day for me for the most part. I got one more at the end of the year, but yeah, I'm gonna do a little bit of that R&R and take your advice, take you up on that. Craig, you're the best, man. I hope you stay well, and I look forward to chatting with you soon.
Thanks, my friend.
Yeah, brother.
Little by Little with Andy Schechtman.